with significant resistance coming in overhead for the S&P, for the NASDAQ, for Bitcoin, for the major markets in the world. This is setting up a huge short squeeze trap, or maybe the bears will finally have their day and send these markets plummeting from this point. What I want to show you is the data of the shorts getting loaded up in the markets right now as we head towards the resistance for the 5th time in the last 10 months. Make sure you've liked and subscribed. Thanks to all you new guys that have jumped on board in the last couple of days. You know what to do. Links are in the top of the video description, and hit that like button. This is for all the shills out there, for the exchanges and whatnot, and our paid groups. Nonetheless, let's have fun here and check out the markets for what they are, the TA and the objective data, as these markets continue to show signs of bullishness. Now, let's make it clear. When the lows come in, you will not hear bullish news. It just cannot happen. You have to hear bearish news at the lows, and precisely what we've been hearing since the May lows, since the June lows, since the July lows, since the September and October cycle lows, since the December lows, and of course, since the most recent severe low being the banking collapse, crisis, whatever you want to call it. From that point though, the markets really did bounce heavily, very, very strongly from the logarithmic downtrend, basically the bear market downtrend. They bounced very strongly off the 50% level, so our 3,800 point level. They put in huge volume at those lows. And yes, I do know that there are quite a few people saying, well, there's a lot of people loading up or selling short, but there's so many reasons for why that would happen. But let's just stick to the data rather than get too caught up in all of the news headlines. Let's clear out the noise and make investing simple. A lot of volume came in at those lows, and now we find the S&P in this case up 8.5% from those lows. S&P 500 has also just put in a new daily close, the highest daily close in 2023, if you're looking at the ES1, which is the E-mini futures. S&P 500, just the SPX, it's still another couple of points off that level, which was on the 2nd of Feb. But of course, this is the most highly traded market out there. So we're going to focus more of the attention on the S&P 500. As to the short squeezes themselves, probably what I've titled the video, something around that. Hedge funds are the most short at SPX they have been since their lows of March 2020. Each time this has happened, it's been a very significant buy level. 2011, you've got 2015, that was a significant low. March 2020, we know what happened from March 2020. Jesus, look at how much they have been shorting the market here. So no wonder they think that they need to keep shorting the market. There have been some good short-term trades, but we've been in a transitional period, in a sideways range since May of 2022. So we're coming up to 12 months now at these levels, and potentially going to break out of this top zone here at 4150. Ideally, you know our number, it's 4,200 points. So if we do get above this level and break above 4,200 points, that is probably going to send a huge short squeeze wave through these markets. You can see just the amount of shorts that are loading up and have been loading up at this point. Hopefully some have unloaded, but if they haven't got rid of their shorts to cover their position so they don't fall into too much loss, that is going to push the market up. They have to buy the SPX, they have to buy the S&P 500, and that will then send this market skyrocketing. Now, all I've covered so far is just the facts. The facts from the chart, you can't dispute that they're higher lows, and the facts that you're seeing the highest level of shorts from hedge fund managers over the course of the last 11 or so years. And each time this has happened, it's been a significant low in the market, and the market has bounced away from that point. 2020, we might not get a huge bounce like we saw from 2020. But remember, at that bottom of the COVID crash, there was almost no one thinking that the market was about to run up huge percentage gains to the upside. Remember, this is your home of macro cycle analysis across Bitcoin, the stock markets, and the most important, real estate. And you're starting to see why it's really important to see how all of these markets come together. So if you haven't already, smash up the like and subscribe to the channel. What we have here is a global equities, the leaders and the laggers. So this is a really big one that we've been following for a while, because you're seeing how many stocks are reaching new 52-week highs. So how many stocks are hitting new high prices in the last 52 weeks? So the gold level here Like we can see, we've got the blue and the gold, emerging markets, developed markets. You've got the gold at all of these levels here. Basically, these are the stock markets themselves. And then you have the blue being the emerging, so the countries that are emerging. They're in the leaders stage now. You can see a lot of the gold that is up here. As you look in the laggards, this is a lot of the Middle Eastern countries, as Brian's talked about here. So it doesn't mean that they're about to fall and collapse into major depressions. It just means that what we're seeing in terms of the upside for the developed and the emerging markets, they're coming through to new 52-week highs. When markets go through to new 52-week highs, typically they run on for a bit longer. I'm not going to be bullish forever. There is going to come a point where we get a very significant collapse. So you've got to be prepared for that. But if we're only thinking that the market is going to collapse now because of everything else that we're seeing in the media, you let me know in the comments of something that I've missed, then you're going to miss out on the gains to the upside when the market is screaming buy, 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 buy. Eventually at the tops, it'll be screaming sell, 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 but the news won't be. It'll tell us how great everything is in the world, whereas now we're still not seeing that in the news. It's just, there's a lot of fear out there at the moment. So moving on to what we've been posting here on Twitter, links, show that in the description down below. You can see these significant lows that come in, and I think this is going to be a pretty difficult pill to be swallowed by a lot of the bears once we do start to break 4,200 and hold above the level. You can see it was support and then resistance, 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 resistance. Now we're getting higher lows. I mean, it doesn't take a genius to see what sort of pattern that forms, especially if we break out and then hold back above that level. So we've got a lot of significant volume coming in at the lows as well, higher than the average volume at the lows, a big level of volume and more volume again. So this is possibly going to be a very difficult one when the market does break higher for the majority of people that are still calling for the bear. The NASDAQ, 3% from the resistance level. So we've got to keep that in mind. I am on the bullish side macro, but there are resistance levels in play. And of course, like we saw with the shorts, it's not like everyone's going to get absolutely destroyed, but there's going to be a lot of people that get destroyed if they remain in those positions for too long, if the market breaks past that resistance. Nonetheless, we have that resistance there. Let's see how the market reacts to that resistance. And then if it breaks through it, I'm going to be saying my prayers for the bears. The US dollar, another sign here that is not looking all that great. It is coming back down to test support. It is on the support, a 100.8. So that has been previous support in February. However, if this holds, that's going to put pressure on the stock markets and of course cryptocurrency, at least in the short term again. If we see an upside here for the US dollar, of course it's going to put some pressure back on the commodities and we'll see those things start to drop off as well. This has been the area that we talked about for the last several days, especially with the amount of negative news coming out about the US dollar, how you've got Russia leaving all the BRICS countries, China, France doing deals in other currencies apart from the US dollar. We're seeing that all at these levels. You can just see how the downside has increased as well. So maybe we are coming to that point there, testing more levels. We got to keep a really strong eye on this. I don't have the answer to this right now. It is on a support zone. If it breaks down from here and holds under there with closes, show is over. US dollar will continue down over the coming months. If not, then it's basically just kicking the can down the road until eventually it does fall. The only question then is, how far does it bounce up? Does it come up and test the 102 or 3 level? Does it test the 105? Does it test the 108? That's the only question if this level holds. Eventually, I'm still in the bearish camp long term. Short term, we got to see what happens. All of that is still working into the same picture for the 18.6 year real estate cycle. We are in this period right now. So now we're going back to the macro picture here. Like I said, we're still looking for a very significant collapse to come into the market, but we have to go through this period of boom. There's going to be a massive boom in the next couple of years. Then we get that collapse. Short squeezing on Bitcoin and cryptocurrencies is starting to reach some of those higher levels. You can see over the last couple of days, the shorts have been getting absolutely destroyed compared to the longs. And if we look at the volume overall, just putting a line across here, it's coming up to the levels that it was at around the lows in March when Bitcoin hit 19.5. Bitcoin dropped pretty heavily at 19.5. That was through this period right here. And you had a lot of people thinking that the market was about to go back down and test 18K, 16K, or even take out the low at 15.5K. And of course, the absolute opposite happened there and destroyed the shorts in that period of time. So we're starting to get up to those levels again. And if Bitcoin does happen to keep pushing higher and higher and higher, it could be a slow short squeeze to the upside, and eventually maybe we'll get something like that where it just takes out all of those shorts in one foul swoop, which then might be a time for a pause and a reflection on the market where we get a pullback. But for now, charts are up, signals are up, shorts are getting destroyed. Bitcoin's also put in a new daily high close for 2023. It's taken us to 310 days of a highest close since that period. If we can get back above the 32,200 level, that's going to really set off some of the short squeeze as well. Nonetheless, there is still significant resistance, so there's a bit of work for Bitcoin to do here between the $30,000 and the $35,000 level. So I'm not going to get too excited until we really do break above that and the level there at 34.5 to 35. But nonetheless, day by day, it is making a good gain on those $30,000 levels. Meanwhile, the dominance is dropping. So the dominance is moving towards Ethereum, funnily enough, which we'll take a look at. But you can see the dominance is coming up to resistance again. Support and resistance, surprise, surprise, market turns back at that point. The good news here is that it's putting in a sustained up move. So the Bitcoin dominance is putting in a sustained up move to test those resistance levels again at 49%. Now, if this thing breaks through, who knows where we'll end. My targets are around the mid 50% levels. You can see here at 56, 54. Reason being is it's a 50% level, basically the bottom to the top, and the middle point is around 56.2%. So if we can get there, that's going to take a lot of gains away from the rest of the market. But for now, it seems like ETH is really stacking on the gains, hitting to above $2,100 as I record this. It's also had its highest daily close in 326 days. So closing in on the highest close in 1 year. Pretty interesting stuff, especially as we had the news of the Shanghai upgrade and people were expecting there's billions of dollars to be unlocked and to dump ETH. It's actually done the opposite. So when you have some sort of bad news and the market does the opposite, go up, you really have to start questioning what the you really have to start questioning what type of market am I in? Am I in a bull market or am I in a bear market? Bad news coming off in a positive sense, in an upside in the market, typically means bull market. Disclaimer, warning on that sort of thing. This doesn't mean that ETH goes all the way to new all-time highs. What it can mean is that we have set in stone the next move up. And yes, there will still have to be a correction. I need to make that crystal clear because I know the bears aren't listening. And they basically say, you said this market was going to all-time highs. Definitely not. We have to get a move up, probably test some resistance. If we do cleanly get through this zone right now, you can see our next resistance levels are at the lows when the market was breaking down and then at the peaks when the market was breaking down. So they're the ones to keep an eye on after ETH gets done making a nice smashing of this level, and then we look to those upper targets. And if things weren't crazy enough, the ETHBTC chart is also holding up. Of course, if ETHBTC is going up, so the value and the dominance is being taken over by ETH compared to Bitcoin, then the BTC.D, so the Bitcoin dominance, is going to fall. And that's what we've seen over the last few days. We hit resistance almost dead on the nail at 49%, a few days to the downside. ETHBTC, on the other hand, I'm on a weekly chart here, has basically sprung from a low here in the same week and is now pushing back towards the 7% level. In the past, the cycle low for ETH, or the entire cryptocurrency market, meant that Bitcoin pairs were continuing to fall. Across the board, sure, you've got plenty of other altcoins which are going down against their Bitcoin value because Bitcoin is strong. That might not always be the case. Maybe it'll change next week. The point here is ETH is actually holding up relatively well compared to what happened last cycle. For the ETH-BTC pair, it's got a lot of work to do to get back towards the downside after pretty significant volume has come in at the current low and the major cycle low here back in June as well. You can see that huge volume that was put in during these weeks. So if this was to fall, it needs to get rejected at the end of this week and then fall back under those lows so that it can come back and test those bottoms that were in there in around June and play out something similar to what happened last cycle. But for now, it looks like we might have a stronger ETH on our hands this cycle than what we had last cycle. And if that's the case, that could send ETHBTC skyrocketing past the 50% level, past the 8.5% level, and potentially getting towards 10 or 15%. But that's probably a long way down the path. Let's first reestablish 7% and then start to climb our way back, if in fact it can do that during this period. If you've been finding value from the channel, why not check out TIA Premium? It's our premium education and investor community. It's where we navigate and show you guys how we piece the markets together across all of the macros, real estate, stocks, and crypto. Pretty much the only place on the internet that you will find that. Thanks again, guys. Like and subscribe. I'll see you at the next one. Until then, look after your skin and peace out.